Hello guys, welcome back to this YouTube channel. I'm going to show you a very simple swing trading strategy for the 75 index. You can smash the 75 index with this simple strategy. Stay with me for a few minutes and I'm going to break it down to you. Now with this strategy, you only need one time frame, which is the daily time frame, okay? And on the daily time frame, we are looking at two things: the current direction or the current structural range. Okay, the current structural range. And the second thing is, within that current structural range, you are going to look for fair value gaps. Okay, now if it is a single fair value gap within that range, you are going to use 50% or 25% of that fair value gap for your entry. But if within the range you have multiple fair value gaps, then you are going to use the fair value gap that is resting within discount or premium for your entry. Okay, don't worry, I'll break it down. Let's go through this. So here you can see that here price is, let me cover it here. Here price was bullish, here bullish. But as you can see, we don't have any fair value gaps here. We don't have any fair value gaps. So the only fair value gap we have is this one. Okay, so if we have a single fair value gap, it doesn't matter if it is not in discount, we are going to use it for our entry. Okay, so we are bullish. The only fair value gap we have is here. We are going to use it for our entry. So there's the gap. We are going to use 50% of that fair value gap for our entry. Okay, and I'll show you the stop loss placements. So 50% of the fair value gap for entry. Now your stop loss is going to be below the fair value gap candle, okay, the low of it, the low of that candle. So there's a fair value gap candle, the low of it, and you're going to give it just a little bit room below that candle. You can target the swing high of the daily structure because price is bullish and it's going to keep targeting the highs. Okay, so that's your entry. Beautiful setup for a 2.9 risk to reward. Okay, see how simple this strategy is. Okay, so this is a bullish example. Let's look at a bearish example. So you can see that after price taking that high, price broke bearish here. Okay, after price broke bearish, we look for our fair value gap, and in this case again we have only one fair value gap, just a single one. So we are going to just measure 50% of that single fair value gap, and we're going to place our entries within 50% of that fair value gap. Very, very simple. We don't have to complicate this. Place stop loss above the fair value gap candle high right there, and target the swing low on the daily chart. So there's the daily swing low. That will be your target. This particular trade would have given you 1.8 R. Okay, so if you know a little bit about liquidity and imbalances, then you could have also held the trade all the way to this equal lows down here. Yeah, but for now, just be targeting the recent structural highs or lows. Okay, so in this point, this is our daily structural low. That will be our target. Selling from here, target down here. Very simple. Now here, now there's one thing that invalidates our trade. Okay, if we have a setup and then price closes above the fair value gap, like in this case, we sold from here profitable. Now we have another fair value gap here, and it's just a single fair value gap that I want to be selling from. But if price closes above the fair value gap, the setup is no longer valid. Okay, so let's say you took the entry from 50% of that fair value gap, it gives you a little profit. Price comes back and it closes above the fair value gap. Your stop loss will still be above the fair value gap candle high. But as soon as you see price closing above the fair value gap that you sold from, please cut your losses short. Just close the trade. Don't put the stop loss there. Price will come for it. So yeah, as soon as price invalidates the fair value gap by closing above it, in this case, just cut your losses short right here and close your trade and wait for the next setup. Okay, Okay, so here price broke bullish here, but price didn't leave any fair value gap behind for us to buy from. So we don't have any setup there. Okay. Price continue to sell, 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 sell. Gives another fair value gap here. Touches it, and then it sells off aggressively. Another bearish fair value gap. Price is still bearish. Price touches it, it sells off. Once we don't close above it, the setup is still valid and we can still hold our sales, targeting the daily swing low. It's that easy, guys. But as I said, if you are in the trade and price comes and close above the fair value gap, close your trade and cut your losses short. As simple as that. Now, there are instances where you are going to have multiple fair value gaps for your trade, and you are going to be confused which one to use. Before I go to that point, let me show you something here. So as I said, we have this fair value gap you are buying from. Okay. Let's say you've entered the trade, your stop loss is down here, but as soon as price closes below the fair value gap, please close your trade and cut your losses short. Just close your trade and then wait to see if price will close back above it. So as you can see, price closes back above the fair value gap. When that happens, you can enter again when price retests the fair value gap here. But as long as price remains below the fair value gap, please close your trade. Don't hold it. Don't hold it and say, oh, my stop loss is still protected. In this case, price went your way without coming for the stop loss. But most of the time, if price closes below the fair value gap, it's going to come for the stop loss. So once price invalidates our setup, close your trade and wait and watch to see what price will do. If price closes back above the fair value gap, you can wait for the retest and you can enter again and hold your trade all the way up to get your loss back and to maximize your profit. Now, I was talking of an important point. Sometimes you're going to see multiple fair value gaps within the price range. Okay. Like in this instance, price is bullish here as we broke this structure high and then this structure high. So you want to be looking for buyers, right? But in this case, you have multiple fair value gaps. One is here, one is here, one is here, one is here. So you're going to be confused. Which one should you use? In this case, don't use the recent one. But what you're going to do is take the swing low to the swing high, note 50% of the range, and then take your entry from the fair value gap resting completely below 50% of that range. You don't want to take it here. This fair value gap, part of it is resting above 50%, part of it is resting below 50%. So we don't want this fair value gap. We want the fair value gap that is completely resting below 50% of the range. So this will be your entry. And then the same thing applies, 50% of the gap for your entry. Stop loss below the fair value gap candle low right there. And you can target the daily swing high. So this is a swing trading strategy. It requires a lot of patience to be in the trade. Beautiful setup, right? Another example is here. Here, price breaks structure bearish by taking this swing low. So you want to be looking for sales, right? But look, we have 1, 2, 3 fair value gaps. You don't know which one to use for your entry. Mark the swing high to swing low. Note the fair value gap that is completely resting above 50%, not the one resting within. We don't want this gap because part of it is above 50%, part of it is below. We want to choose the one which is completely in premium, and this is it. You can take your entry from there, stop loss above the fair value gap candle high for a beautiful ride. Okay. Stop loss above the fair value gap candle high. So there's the fair value gap candle. The high of it is your stop loss. You can even place your stop loss just above the body, but the high is safer. And you can ride it all the way down to the daily swing low. Okay. So this is a swing trading strategy, and you're going to be in the trade for a couple of days before your full targets may be hit. So this strategy is not for those who are not patient. Okay. This strategy is for traders who are patient enough to bank huge movement on this market. Okay. Yeah. So you're not going to win all the time. You're going to take losses as well. Okay. So if you take a loss, don't beat yourself. But trust me, this strategy has around 65 to 70% win rate. Okay. Look at this one. Price breaks bearish by breaking this low. We have multiple fair value gaps. 1, 2. You don't know which one to use. Mark the one in premium, the one resting completely above 50%. And then take your entry from the midpoint, stop loss above that high, and then you hold it all the way. Okay. Above that candle high. Hold it all the way to the daily swing low. You don't require any lower time frame confirmation. No, you don't require any lower time frame confirmation. Once the daily order flow or market structure is set, look for your fair value gap. Okay, if it is a single fair value gap, that one, whether it's in premium or in discount, you are going to take your entry from the midpoint. But if we have multiple fair value gaps within that structural leg, take your Fibonacci and measure and make sure you are taking the fair value gap that's resting above 50% for your sales. Okay. And then the only thing that invalidates your setup is when price closes below, closes above your fair value gap. Okay. So there's one example here that was a failure setup. Let me get rid of this. So as you can see, price was bullish here by breaking all of these highs. So as you see, we have two fair value gaps, this one and then this one. And you want to be looking for what buys, right? So you're going to take, since you have two fair value gaps, you measure from swing low to swing high. And you're going to take the fair value gap that's completely resting below 50%, right? And this is the fair value gap completely resting below 50% of the gap. So as you take the buy from 50% of the gap and place your stop loss here, once you see the candle or the daily candle closing below the fair value gap, cut your losses short. Don't even wait for your stop loss to be hit. Close your trade and wait to see if price can come and close above. But as you can see, we closed below and went all the way to break this structural low. So it's now bearish and no longer bullish, right? So here we would have taken a loss, but you wouldn't have taken a full loss, just a partial loss. So initially your stop loss would be this candle's low. But as you see this candle close below the fair value gap, you just cut your losses short immediately after that candle close. And you simply wait for the next setup, or you can wait to see if price can come back and close above the gap, retest, and then you buy. But in this case, it doesn't happen. It continues to sell, and then we break structure bearish. So as soon as we break structure bearish, the same thing applies. Take this range, high to low, and then look for what? Look for premium fair value gap to sell from. And then this one, the premium fair value gap is here, like we backtest early on. So that would have been your sell trade, and that would have been a big win all the way to this level. Okay. So it's not complicated at all. Just one time frame for swing traders. Okay. And I don't recommend this style of trading for those who are holding $10, $15, $20, $30 accounts. No. The minimum account balance you should trade with for this is $100. Okay. $100 because this is the daily time frame. Okay. So $100 is cool and you can raise the minimum lot sizes. And trust me, if you take the 75, if you take 0.001 from this level and hold it all the way down here, trust me, this can give you like a lot of money. A lot of money. This is the daily time frame. Imagine catching a trade here, holding all the way here. A lot of money. Okay. Imagine catching a trade here, holding all the way up here. A lot of money, even with the lowest lot size. Okay. So this is simple. Go into your charts, backtest as much as you can. So let me show you a recent setup. I even shared the setup with my Telegram community. So there was this break of structure here. It happened recently. Break of structure there. We look for fair value gap. So this is just a single fair value gap. So in this one, with this one, we don't have to measure low to high to see if it's in discount or not. It's just the only fair value gap we have. So you just take 50% of it for your entry. And if you enter 50% of the gap here, with stop loss below the fair value gap candles low. There's a fair value gap candle, so the low of it, stop loss. Targeting the swing high, you can see how profit would have been hit easy, right? For a 3.7 hour. And the risk to reward is just insane. It's insane, guys. It's insane. If you are liking this video, please hit the like button. Support this video, hit the like button. Okay. So this is insane. Okay. And this trading style requires patience. Okay. If you don't have patience, this is not for you. Because sometimes you're gonna wait for a couple of days for your setup to form. But you can also use this strategy on all the derivative synthetics that are available. Okay, it doesn't only work for 75, it works for the rest. Okay, it works for the rest. So you can have about 3 to 5 derivative synthetics on your watch list, and then you can be monitoring for structure, fair value gaps, and then just smashing it day in and day out. So thanks for watching. As I said, if this video was helpful, smash the like button.